The war on crypto, it didn't end just because the lawsuit stopped. It just changed forms. And we had Gary Gensler for years trying to kill this industry with regulations. But now we got Jerome Powell, the Federal Reserve, really the final boss. And they realize it's not about banning your coins. Their approach is draining liquidity, freezing markets, choking risk assets, crypto and stocks alike, leaving investors gasping for air. And Powell, he smiles while he does it. But there's a twist. There's a problem. There's a reason why this isn't going to work because of, well, Wall Street, BlackRock, JPMorgan, the same institutions that told you crypto was a scam. They're now quietly buying everything they can. They know that the war is over and that we have won and that Powell cannot stop what's coming here. And everyone's going to be staring at Powell's interest rate theatrics here this week. It ain't going to stop anything. Let's look at this here. So this was the big thing. The biggest threat to XRP right now isn't the SEC or some regulator. It's the bond market. The 10-year yield just ripped up 4.17%. Higher yields, stronger dollars, headwinds against crypto. If the Fed is, well, hawkish on Wednesday, expect volatility. We know they're going to cut rates, but it's all about what Jerome Powell says. But this is the issue. They can only do this for so long. They've run out of abilities to slow down this market. That's the reality. Because the job market is going to crater. They cannot tighten things any longer. So what can they do? Well, they can just talk tough. They can jawbone. That's about it. That's their last tool in the tool chest, and that will cease to be effective soon enough as well here. Now, the Asian markets, they're dumping right now. They're playing into the Fed fear. They're falling for the bluff. And the Fed is just, like I said, using jawboning, tough talk to tighten markets because they're actually out of policy bullets. They will cut rates. Yeah, they'll talk tough, they'll talk hawkish, but there's nothing they can do. The reality, the markets will eventually stop believing the rhetoric. With $36 trillion in debt, the Fed must monetize. They can't afford higher for longer forever. Actually, they can't afford it any longer at all. When the market realizes the Fed's bark is bigger than its bite, the trust fall into risk assets begins here. And we see this just came out from Bloomberg right before I started recording. Fed may need quantitative easing if market questions new chair. Look, they just ended quantitative tightening here recently, and they're going to pivot to easing. They're going to start flooding the market because they're going to have to. Cutting the interest rate isn't actually going to have the effect they're looking for. They're going to have to step into the bond market and start buying assets. And when they do, you're going to see that interest rate then start to come down significantly. And that's what we're waiting for. Looser financial conditions. It's on the horizon. And when that happens, it's bullish for crypto and specifically altcoins and specifically XRP. That is when we will see our run there. Now, to me, the bigger news here is the trade war. The AI trade war just blinked. After a 2-year ban, the Trump admin is preparing to reopen NVIDIA's H200 pipeline to China. CEO of NVIDIA with Trump last week. Today, the $50 billion wall cracks open. The macro signals are strong here. Washington is choosing commerce over containment. And the big question on everyone's mind leading into next year, does this AI spend continue? Because it fuels everything. It fuels the stock market, crypto, this economy in general. And when we look at this, we're hearing from Micron that they ain't even going to sell to consumers any longer because they got so much demand from AI companies. They're just ending that whole segment of their business. We're seeing stuff like this. We're going to have increased demand from China being able to now be legally met. This is bullish. And if AI spend continues as expected, 2026 is going to be a big year, and all signs show that's going to happen. This is more important than whatever Jerome Powell has to say tomorrow. You best believe that. Now, we saw XRP troll Justin Bonds. He kicked up this dust, saying once again, the same tired argument that XRP is permission and therefore centralized. This is interesting here. I responded to him. You'll see permission does not equal centralization. Treating permission and centralization is the same thing as false, both technically and academically. And beyond that, semi-permission is more accurate. This is not a flaw. This is not a centralization tactic. This is a design scheme. What do I mean by that with the XRP ledger? This is the truth about XRP ledger's permission myth here. Critics confuse consensus mechanisms with centralization. This is the reality here. Why? Why do we have this? XRP ledger needs shared trust anchors, the UNL. It needs an overlap. Everyone can't pick any validators they want. They have to follow at least some overlap, sufficient overlap to reach consensus. If every validator trusted a totally different list, the network would halt. Anyone can validate, but trust must be earned in this system. Ripple's role here. Ripple does not control. They publish a recommended UNL list. That is it. They have zero protocol level power. Validators are free to build their own lists, use a community UNL, ignore Ripple entirely. This is the point. Influence does not mean control. If Ripple says, this is the UNL we trust and everyone follows it, that doesn't mean they have some authoritarian control. Ripple is trusted because of their reputation, not because of code, not because of law. And what I see in the future here, a UNL can grow independently. Ripple's role doesn't even need to be involved. They would be best to step back and let the foundation, the DAO, any other number of people set that UNL. It doesn't have to be Ripple. There's no reason it needs to be them going forward. They don't need to curate that list. And I hope someday they do step back and that ends this whole silly argument. The bottom line, XRP is semi-permission by design, not centralized authority. It doesn't give Ripple any more control. It's just the design of the system. No one gains anything by putting a recommended UNL list out there, and that's just fact here. Now we see Brad Garlinghouse saying the following: 4 weeks, and XRP is now the fastest crypto spot ETF to reach $1 billion in asset under management since Ethereum in the United States. With over 40 crypto ETFs launching this year in the US alone, a few points are obvious to me. He says the following: there's pent-up demand for regulated crypto products. And with Vanguard opening up access in traditional retirements and trading accounts for Americans, crypto is now accessible to millions of people who, couldn't access the technology before. Longevity, stability, and community are all underrated themes that matter in the new set-off of off-chain crypto holders. We're going to see this continue. More XRP ETFs roll out there, more people learning about this asset, more people investing in this asset. It's just a matter of time. Bitcoin, it didn't go to the moon the first day after that ETF launch. It took time to build up demand, to build up assets under management, to really have an effect. It started to steamroll things. Ethereum, I think once you get staking in an Ethereum ETF, you'll see the same thing. You're at a huge disadvantage currently if you buy the ETF and not Ethereum direct. That's not going to be the way in the future. That's going to be a popular product. XRP, same thing. It's going to take some time, but these are sticky investments. These investors here on Vanguard, they're not trading stuff, right? They're going to make a long-term investment, a significant sized investment, and they're just going to hold it. And that's going to make a big difference over time. It's not about the hype, the announcement. It's allowing people that have never been able to buy XRP before, or crypto for that matter, to be able to put an investment into this space. And you're going to see more and more people are going to suggest some allocation to crypto. They're not all going to be degens like us and have a significant size of their investment portfolio in this asset class. They don't need it. They got a lot of money, and if they divert 1%, 2%, or 3% to crypto, and they have a diversified portfolio of your major crypto assets, it's going to make a huge difference over time. Let me know down below what you think. Jerome Powell, is he going to try to be hawkish with the things he says? I think he's just cashing it in until his last day. He's almost at the end of his term. I think he's going to get up there and say we're data dependent. We don't know what's going to happen. We'll look at the numbers and don't count on another rate cut. We're not going to get anything big out of him, in my opinion. But if it is overly hawkish, be ready for some volatility, but it's all a bunch of nonsense. They're going to have to really open up QE in a big way. They're going to have to bring that rate down, and that's where we're going to thrive. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.